Gentlemen, welcome to the weekly market watch here on the Financial Summit. My name is Mike Williams, and today we're going to do something very nice because I am going to take a look at the Bitcoin chart and I'm going to show you how I'm making sense of the chart by doing some technical analysis. How do I draw my levels and how do I come to the conclusion of validating and invalidating level that can show us some signs of strength or signs of weakness. So sit back, relax, and enjoy. And in the next 15 minutes, I hope that you're going to learn a lot. Today, I will be doing this show solo because normally you might notice if you've been following the show for a while, usually Sami is also with us. Unfortunately, today he is traveling, so I will do the show alone. Nonetheless, I hope you're having fun, and let's just dive straight into it by opening up, first of all, the Bitcoin chart. The Bitcoin chart is looking pretty good. It's honestly, it is looking pretty good. Over the last few weeks, we have talked a lot about the $68,000 level that needs to be reclaimed, and we have done so, So what is now next on Bitcoin? Are we going to reach all-time highs, or are we going to consolidate any further? And in order to find that out, we're going to do some technical analysis. If you're not familiar with what I do, I'm a trader. I do swing trading, day trading, and scalp trading. I mainly trade crypto, but I also occasionally trade some stocks. And nonetheless, I do keep a watch on the normal indices or the index and forex as well, because that often does influence the Bitcoin chart. But today we're going to focus on Bitcoin solely, and I'm going to walk you through how I construct my chart. So in order to get a little bit of a grip on where are we here at the moment, well, simply zooming out on the chart, it's undeniably that we are in a major uptrend, right? We have bottomed out in 2022. We made consecutive higher highs and higher lows along the way, progressing as such, embarking on a really big uptrend with a little bit of a hiccup as we were approving the ETF on Bitcoin. We saw a lot of outflows from GBDC into the ETF, and that caused a drop, obviously, but then quickly recovered and actually made new all-time highs. But now we have been consolidating for a month or so, and if you know what the charts are telling you, there was really no reason to be truly bearish. And that conclusion can be pulled from the moment we saw that very first retracement. We put in a low with a long wick and then traveled to new all-time highs. Now, and then we started that consolidation period that possibly, right now, it is a high probability that that consolidation period has ended. But this first wick and this top gives us that first construction point on how we can read those charts. And I personally have been looking at this as a sideways correction all along, with a potential to fake out to the downside, which is exactly what we got. And what I can do here is I select my channel, and I hold my shift key, giving me a 90-degree angle snap, and I connect it to the very upper wick, giving me a very nice sideways channel. And what is really important about this channel is that the midline must be well respected. Otherwise, the validity of this channel can be quite questionable. And as we have seen in the past already, we have seen quite well respect. And this becomes ever more so evident if we zoom into the lower time frame. For example, the 4-hour, 1-hour, or even lower time frames. We see very nice reactions on this midline back and forth throughout this entire correction, marking out that exact $68,000 region. I'm looking at this as a region, not as an exact level. And what we've done, so we've embarked on a downtrend, right? We have seen that fake out, giving us really nice respect on that bottom of the channel before actually reclaiming it, establishing once again that local bullish market structure, indicating a potential trend reversal, only for us to trade back up to that very important midline. In other words, $66,000 to $68,000 resistance region. We struggled there for a little bit, we ranged on for a little bit, and then we made a new high, only for us to get rejected off of an old monthly close level, which I will show you in a second. Seeing that retracement upon the ETF approval, right, we saw some heavy volatility in the markets. On the Ethereum chart, we even saw like an 8% drop on the 1 minute time frame, which is pretty insane. But nonetheless, The level held up, and we are now experiencing a bounce once more. Now, currently, just now, we are establishing or re-establishing that local uptrend once again, indicating that that retracement back to $68,000 has held up successfully, and we can potentially look at higher prices. But now we do need a little bit of refinement, because we cannot just say like, oh, we're going to go to all-time highs next. We need to build a little bit of context. And the way that I like to do that, I like to look at candle closes on higher time frames. So first of all, what I would like to do is zoom out to the monthly time frame, and I select a horizontal level over here, simply letting that snap to the candle close and marking that out with my specific color coding, in this case a monthly level. And if we then zoom back down into the local time frames, then we can see why we got that rejection exactly at that level. It was the monthly close of, let me check that out, the monthly close of April, and the monthly open as well, right? And that's what we got that rejection for, only to retrace to $68,000 and now starting to make our way back up again. Now, the monthly time frame, the next one below us, the next monthly close below us is very far below. For me, that's a little bit too far away, as I'm talking about $68,000. So for me right now, it doesn't make sense to mark out that level. So what I need to do now is I need to scale down to the lower time frame and see what's going on there. If I look at the weekly candles, it's also a little bit far away, as it is below that $66,000. So then I proceed to the daily time frame, which for me is the last time frame where I tend to mark these things out when I look at the low to mid-term time frame. And low-term time frame doesn't mean this is for day trading or scalp trading. The low time frame I'm talking about in a span between a multiple days or something like that, right? And that does give us some levels that we can look out for. Once more, we see that $65,000, $66,000, and the most recent one, we see $68,000. And that is where we can get that more precise punctual level from. Now, also, we are constructing a new daily level at the moment, but that's not the one I want to talk about today, as that is currently still in progress. The one that I want to talk about right now is actually this one, because we are marking here out support. But what about resistance? This is the resistance that we're struggling here today. And now that we have mapped out some basic technical analysis, we can start framing, deconstructing the chart into smaller pieces, and then it is up to us to tie this back together and come to some conclusion. Where does the higher probability lie? Now, simply put, if we say, okay, we have the monthly level here as resistance, and we have that midline of the channel here as the lower piece of resistance, that is currently the section that we are trading in. As long as we don't trade above the level, it cannot be classed as bullish. And as long as we don't trade below this level, it can also not be classed as this being a rejection. This is called a reaction, but it's not called a rejection, right? A rejection would be if we actually would come back below the level and backtest it as resistance. That would actually increase the probabilities for us to trade to lower prices, and therefore a sign of weakness on the chart. That hasn't happened yet. So you could say we're currently simply range bound, or in other words, consolidating in between this monthly level, $71,356, and let's say 66,500. In other words, that midline of the channel. Now we can refine this even further, because much more locally we have bounced from here, we got a little bit of rejection, and we have some price action over here. But we have these two daily levels as well, also marking out an in-between state. So we have a consolidation period inside our consolidation period. And this is where it gets very interesting. And for me, quite frankly, where it becomes very fun and very day tradable. Because we are currently hovering in this situation. We have established this as support, and the same story goes here, but just on a smaller scale. As long as we don't trade below this daily level, then the probability is relatively small that we are going to see price dropping down to $68,000. And as long as we do not trade above this daily level, we cannot look for that upper resistance levels. And that is the structure that we currently can use to assess strength and weakness. And right now, we have a great example of Bitcoin currently showing signs of strength. Why? Because we are trading above this daily level over here. We simply have reclaimed it, and in the process of doing so, creating a bullish market structure state within the range. And that in turn increases the probability of us trading up higher, possibly towards this next resistance level. If we manage to reclaim it, then we can say, okay, that is a really high, big sign of strength. And that's the moment we can actually start looking for higher prices, which in this case would really be all-time highs. So we can come here to the conclusion. We have now already established an early sign of strength by actually trading above that daily level right now. The next level of resistance is going to be 71,356, and to be very precise, 60 cents. That is going to be the next resistance. If you are a derivatives trader and you are a day trader, that could be a potential opportunity to look for short trades. However, if we break through the level and backtest it as support, then we can look for higher prices, with this being the next target. And in this way, we are able to manage our expectations. And instead of saying, oh, the chart looks bullish, we are in an uptrend, which all is true. But now we are able to dissect it even further, and we have more detailed analysis available to us where we can say, okay, this is a sign of strength, and the probability increases for prices to trade higher or lower. And based off of that is how we can get grip on the chart, grow our confidence, and be aware of where the probabilities lie. And that is what we can use to make informed decisions when you're deciding to trade an asset such as Bitcoin. And this works on every single chart and every single asset available on the market. I'm just using Bitcoin as an example today. So that is currently my analysis. I'm keeping it basic and simple over here. Obviously, we can add much more complexity, but in order to add more complexity, you must first learn the basics. And that is what I'm showing to you here right now on this video. And of course, I also make an effort to teach this. If you are interested in this, then you can take a look on my YouTube channel over here. This is Mike Williams Trades. I also do a show every single day where I do cover technical analysis and crypto news, crypto updates, etc., etc., etc. And as a matter of fact, let me actually reset my screen here for a second, because I do notice that I made a small mistake here. Bear with me for a second here, guys. There we go. We are back here on the chart. This is my YouTube channel. It's called Mike Williams Trades, where you can check out some of the content that I make. I cover here every day, noon, Central Eastern European Standard Time, everything that's related to crypto, news, etc., etc. However, I also make an effort into teaching this in way more complexity and step by step, which is called Thrive Labs, where you can learn how to trade, where we have an academy with multiple courses available, where you can learn all of this technical analysis, where you can learn all about risk management, and basically how to stabilize that portfolio initially. Now, the last thing that I want to say here about Bitcoin is we have traveled, we are only talking here about upside targets, right? Let me also actually cover the downside targets, because nothing is a certainty in trading, and that can always happen that we get a rejection. We do have to keep in mind that today is a market holiday and the markets are closed today. So that is why I'm a little bit cautious on any break to the upside or to the downside, as it is usually very likely that on actual market days, these moves tend to get reversed. And that has to do with the liquidity simply not being there right now, because the markets are closed. The overall markets are closed. So if we start to trade back into this channel, then we can class this piece of price action as a fake out, and we can continue looking for rotations within these two levels. If we break this to the downside, then simply we can look for a retest of these levels once more, which have proven to us that it is a valid level, not only here, but also here, here, and here, right? We traded through it, but reclaimed it, chopped a little bit through it, but it is a level of importance. Now, if we start losing the level, And then I'm going to do the exact same thing to the downside, following simply by price structure, where I can mark out the low of this entire section, which is the previous section that we have traded in as we were bouncing from our $56,000 lows. That means that the next level of support is going to come in then at $65,000. So basically an increment or a decrement. Forgive me in my English, it's not my native language, but that is going to be our support levels. Now, if we start really losing that level, that is where this local uptrend or this range rotation, where we are, after all, trading in a very large range as well, that would be the moment if we start trading below this level. That would be the moment where we can say, okay, now Bitcoin is starting to look a lot more weak, and we can expect two things: either a further drop to the downside, or what I personally deem more likely, continuing to be range bound within the upper boundaries of these sections. And that all fits within the narrative of our post-halving price action as well, because we have seen that in the past multiple times, where we saw after the halving, we saw a very long period of diluted volume, diluted trading price action, where we also have seen this, let's say, at the previous all-time high over here. This was at $20,000. If I would simply cut off a little piece of the chart, go into the lower time frame, then we can say that pretty much exactly the same thing has happened here as well. The first test at all-time highs at the time, big rejection, trying it again, actually making a new all-time high, but then have another retracement before crawling up over the period of, let's say, 1.5 month or so, before eventually actually breaking through, right? And as a matter of fact, this was actually halving price action, right? Or sorry, all-time high price action. This is actually where the original halving occurred, and we can see the exact same situation occur as well, where we are attempting to break a larger trend over here after the COVID crash to the upside, where we're simply trading on a very sideways range, sideways, very choppy, and that elasticity goes from very wide price action, narrowing it down, building up all this energy before eventually finally choosing its direction and decisively breaking out to the upside. Now the situation is similar and different in the sense that we are seeing the same price action right now at current price levels. However, the difference is that we are seeing the halving and all-time high price action at the same time. But only by looking at just one all-time high and halving prior to us, we can see that we see the similar price action towards that, towards those two events. It just happens to be that they now coincide with each other. But if we study the chart, we see that exactly the same thing is happening. Exactly the same thing is happening. We have the halving coming up, or we have had the halving already, and we embarked on a retracement and sideways price action. We are at all-time highs. We have embarked on a retracement and sideways price action. And that is why it is important to be aware of what has happened in the past, but you always should use the current price action to your own benefit by mapping out these levels, so that you are aware and confident in saying, okay, now Bitcoin looks strong, now Bitcoin looks weak. That, ladies and gentlemen, is my analysis for today on Bitcoin. I hope you really enjoyed this analysis today. And if you're looking to learn more, then either tune in next week once more. Friday, Sami is doing his show again on this channel. You can check out Sami's channel, you can check out my channel. And if you are interested in learning more complexity about technical analysis and really nail things down, then give us a visit over at thrivelabs.io. Thank you ever so much for watching, and see you next week, ladies and gentlemen. Cheers and good